Good morning. Sorry, delayed. Just had a live session that's wrapped up here. Just popped on for a quick segment. Let's go to the charts. Sorry, and things certainly look a little bit better. Stabilizing the market. If you saw my YouTube session yesterday, my thumbnail was, I think I posted in Telegram yesterday. Nvidia must save the market. So there you go. And for the most part, it did. Then we had non-farm payroll this morning that was released. Kind of an interesting takeaway in the jobs numbers. So I've got Bloomberg calendar up here, forecasted for 53K, came in 119. However, in classic like revision fashion, we went from positive 22 to negative 4. So I know this data is September news data, but the revision certainly didn't do any favors. We did see also a slightly higher uptick in unemployment rate. Um, I'm not questioning. What I looked at was when this news came out, what happened to the Fed Watch tool. And from what I noticed this morning, the probability of the Fed pausing through December is higher now. It was 66%. It was 50-50 like literally a couple days ago. Then it jumped up to 66. Now it's 72. So it looks like the pause camp is official, at least for right now, going into December 10th. But the nice thing is for where the markets are at, we're looking at a big fat gap to the upside. 672, almost 673 on the SPY. Futures up almost 1.5%. This year, 1.56 on ES. NASDAQ futures up over 2%. Dow futures up almost 1%. Russell futures up about 1.39%. So and the important thing today is that not only do we push higher, gap higher, but we stay here. If we gap up and fade, well, that's no good. If we gap up and stay, then we're reclaiming the 50-day moving average, which I think is encouraging, right? So, all hail NVIDIA. They're going to be adding $300 or $400 billion in market cap based on that move. 4.53, I think it's going to change to the upside because we're up about 4 to 5% here. Looking about a 5 and change open. Now, if you remember what I said, I've got it written right here. 5.66 was the average earnings move. Okay. And from the close yesterday to today's open, we're looking at about 5.27. That's pretty much the expected move within 0.4%. So that's not a surprise. I also think that the upside here, if we're expecting 5.66, I looked at a long straddle yesterday. The broker was expecting like a 12.23 move. My calculation based on the previous options earnings reports for 5.66. So I had 10.57 was my calculated move. The broker anticipating a slightly higher volatility, 12.23. The at the money straddle, if you bought a call and bought a put to try to trade this either direction, you're paying 13.30. So per the options prices, you're paying more to get long NVIDIA, unless it was just, I'm only long. I don't want to be short. I'm just long. Well, then it was like $7.80. Well, even that, yes, it could offer some profit this morning. If you bought an at the money call, it was like $7.80. You're getting a move of about $9 and change. It's enough to cover the cost of your trade and give you a couple bucks, right? You pay $7.80, you walk away with maybe $1.40 and change as we come into tomorrow's expiration. So that's probably if I was in a long position on NVIDIA, if I did I did like a 185 by 187, 750. I was looking at that debit spread yesterday. It was like a 125 to make 125. We'll be looking good for profit today. So I'm just kind of happy that, the market was kind of saved by NVIDIA. We're right back here where the damage is not as intense. And now that we see some big gapping in the futures market, we will see if we can reclaim the 50-day and hold the 50-day. We'll take a look at our gamma levels today. We should be returning to positive gamma with this gap up of 1+%. So if we're up 1.5%, we are way above that positive negative gamma pivot point. We're talking about an open way up here towards like 67 and change, which should do a couple of things. If you're in my waterfall income class, you're going to be loving some of those trades we have in. Now, obviously, we're not at all-time highs. We still have some time in those trades, but certainly better than having some pressure on those wider credit spreads for our waterfall strategy too. Okay. Catherine, what's that say? Chris says to get some puts, but I think it will fall back for some NVIDIA. What are the questions? What are we asking here? Is anybody thinking you want to short NVIDIA? I mean, I'm not going to short it. I think if this is what the market needs, like I said this all week, all eyes on Nvidia now that we have the earnings in and they beat, right? I mean, I was looking at like a 56 billion and they printed 57. I was looking at like a 1.26, 1.27. They printed 1.30. Again, it's kind of insane, like law of large numbers for Nvidia, and they continue to beat. Um, but I also know that there was a lot of lowering the bar when it came to April guidance. When this year, when we had Liberation Day through March and April, a lot of the estimates, the earnings estimates, were lowered so dramatically that it was kind of easy to come out of that with like, we're beating earnings, we're beating earnings, we're beating earnings. But Nvidia, I mean, yeah, they've got big shoes to fill. They're the number one company. They're going to get probably $200 billion of market cap back today, and they're going to drag the whole market with it. So, this is up five and change. This is like, let's just say 5.5%. Okay, 5.5%, and you're looking at the overall market up. So 5.5%, and the overall market's up 1.5. That's how powerful Nvidia is, right? Like the market is. I mean, we're getting like outsized moves in futures, outsized moves pre-market, all because of one stock. I don't think non-farm is really what busted the move up, right? Non-farm, I mean, I guess it's better than having like a negative revision and a negative jobs print, but it just increased the Fed's pause probability. I think that really the most important thing for today and this week and going into next week's holiday trading is that Nvidia just kind of hangs out here, and hopefully we have some push to the upside. So if we gap up, what traders don't want to see is price gapping higher and then immediately filling the gap. That would not be good. If we gap up and we either use that gap fill to then rally more, fine, I get it. Like we could have some, noisy price action, but it's going to be really critical that this gap, if it's filled, it offers support. Because if this gap is filled and it comes back down to these lows, you're going to drag the market with it. Like that's how big this is now. And this was kind of the final earnings need for the market to say, okay, Mag 7 was weeks ago. The bulk of earnings season was weeks ago. Nvidia steps in, late in the game, right before the holidays, and maybe stabilizes everything. Okay, so I know recently, like SoftBank sold the shares of Nvidia, and Peter Thiel, whatever fund he has, sold their. Who cares? I mean, they're doing something. Maybe it's because they were leveraged to the teeth on it. They need to trim positions back, or maybe it's time to take profit. It's like it doesn't necessarily mean it's a bearish sign. So we'll see. I think price action is key, but it stayed within the expected move. That's not an accident. I'm happy that it would reward some bulls here, but let's make sure that it stays. And if it is going to come back and fill the gap, that gap offers support, right? We'd be again reclaiming the 50-day moving average, the SPY, reclaiming the 50-day moving average. We need to stay above this. If we see the SPY up today and fading back down, that's not good. Up today, fading back down, it better hold support. If it's up today and it pushes higher today, we just give ourselves some more wiggle room. Where as long as prices stay back above this 50-day, we're kind of in the clear for now, where the market can return to this kind of bull market sentiment. And VIX took a huge dump. Yep, VIX absolutely from 25, almost 26, all the way down to 19. But that also, okay, do we just continue to retreat on the VIX, or do we come right back up to get back into 20s? I mean, I almost wonder. I mean, what other drama do we have? We just had Nvidia earnings. We just had non-farm payroll. Like, what else is there that would be required for the VIX to stay elevated? What other uncertainty would the market be pricing in right now? I can't think of anything. Like, this was a big week. This is a big week with return to U.S. data. This is a big week with Nvidia earnings. It matters. Nvidia delivered. It wouldn't shock me if the VIX continues to revert a little bit more into like the 17s and 16s. Okay. So employment numbers declining. Well, to what degree? I mean, unemployment rate went up by 1/10, 1%. Our non-farm numbers were almost double what was expected, but that's 2 months ago. That was a September jobs report. I'm not saying that things would get better from a September to October jobs report, because we should see the October jobs report from BLS released in December. That's the one that they canceled this week. They did not do the September and October release. They just did the September. So we'll see what that looks like in December, which is probably going to be right around the Fed rate decision as well, which is on December 10th. So anyway, we've got a little bit of time before the open here. Let's crunch some numbers. We're looking at a big fat gap to the upside. S&P futures up 1.57. We had a nice range trade yesterday. Here is my daily profit play. So the ATR tracker that I watch, here's the link that I posted in the tab yesterday. So we called the high, the low, we put on some defense trades, no need. We had that huge rip to the upside, came right back to center. I got out before the FOMC minutes. If you held on through the FOMC minutes, that $1 credit was trading for like 10 cents around like 2 p.m. yesterday, 2:05 right after the news. I got out around like 1:12 or 1:15 p.m. for a 30 or 35 cent exit. So I took most of the profit, didn't have to worry about the FOMC to be disruptive. I kept the defense trades in for the day, didn't need them, didn't get filled, no big deal. But that was our day yesterday. Okay, so we'll see where we're at today. Let's get some numbers. We are going to, like I said, be looking at a pretty big gap. Let's recenter this thing, 66.42. So I'll update my daily profit play, 66.42.15. That was the close. So recentered. VIX is at 19.61. Let's keep an eye on the VIX today in case it's going up or down, but I'll do the rough calculation here at 19.6, 19.61. So 1.22. Let's just round it up to 1.23. Okay. Now, again, I say 1.23, we're going to have a huge gap. So we're going to have to take the gap plus. Okay. I think a defense trade could be pretty important today. I'm probably still going to go low deltas on the daily profit play. And also the crazy part is if we open up 1.5% higher, we're going to be talking about like a 67.40 open, 67.45 open. Well, from the daily profit play centeredness of yesterday's close, that's already above my entire VIX box. That's already more than the entire VIX calculation, right? We're looking at like a 1.22, 1.23, but that is intraday pricing. On top of that, you take the average daily range, which is around 78 points. So today, let's make sure that our volatility is because VIX has come down a bit. The expected range trade is probably much lower than what we've seen the last couple of days. Let me go SPX. So coming into this morning, so this is showing like a plus minus 86. Now I think that was all pending NVIDIA earnings. That's a lot, right? And at the open, this is probably going to change aggressively with the new VIX, right? VIX has dropped 4, 5, 6 points. Keep an eye on this for the morning, but here's what I want to make sure we do. Whatever deltas I'm selling, whatever premium I'm looking at, I'd like to make sure that I'm at least 80 to 90 points away from center price. Because if the ADR is 78, this shows a plus or minus 86. I know this will change at the open, okay? But with an ADR of 77 and having some juice to potentially move 1.23%, again, it's a day where it's like I'm probably going to put on my daily profit play and probably put on my highs and lows for some defense. Okay. So I'll be conservative on the gap higher, take my gap plus the VIX. We talked about this in the masterclass in my daily profit play. We did this on Tuesday together, and we're going to have an encore session today. If you'd like to join me for my daily profit play masterclass, that will be today at 1:30 p.m. Eastern time. So all members are welcome, new and current. We're going to revisit the kind of encore logic. We've got notes. We've got an updated classroom, and let's go back and kind of, if we need to revisit it, like I know there's a lot of information that I threw out there on Thursday, but this was the most refinement that I've had with our masterclass so far. I mean, we've been in this service now for over a year. And to me, this is like the most confident that I've been in our ability to take really good trades every day and also have defense to make sure that our risk is very manageable. I don't want to lose. Like I wouldn't place trades during the day thinking, well, I might lose this one and I have to play defense and try to work my way out of it. No, my goal is to win. The defense trades are there to either add to my winners or not really be any problem. Like yesterday is a good example. The trade yesterday was our daily profit play worked out perfectly. And I grabbed a majority of that profit. If I had the defense trades, they were there if I needed them. Okay. But turns out I didn't need them. So it's okay. They didn't cost me anything. I didn't try to, play defense with something that cost me money that chewed into my profits. I just managed my daily profit play. Okay. Larry says I had NVIDIA 190 calls exercised, sold 192.50. I don't know, dude. That's tough, man. Have you made a bunch of money on a video already? Were you like in with like a much lower cost basis? You sold some calls. Because honestly, if I was gonna roll them, I would just roll them for like at the monies or in the monies. I wouldn't try to get super creative. I think that it's going to be difficult for Nvidia with market breadth as bad as it is. I think it's going to be difficult for Nvidia to go too much higher than like a 210, 212. So, why am I skeptical? Because if we gap up today and we immediately fill, you go from a 195 immediately back to 185, and now all of a sudden you're not going to get it called away. Um, I'm just look. I'm going to say it's if I'm in the position, I'm okay at these highs with a 100+% rally off the April lows, taking some profit on Nvidia. I mean, I don't want I don't look I don't want anything to go down. I don't want the markets to cause any pain for anybody. That's never fun. It's way more difficult. Even though there's great opportunities in a corrective market, it's not easy because bid ask is wider, liquidity dries up, things go risk off, markets are crazy, intraday price action, all the moves they get a little bit lopsided, one sided, and extreme. It's not fun for anybody, and most traders struggle in that environment. So it'd be nice if we just went right back to the highs. So maybe through this like 30 to 60-day stretch in the holidays, maybe rolling like week to week if you get some credit for it. But I don't know. I wouldn't be super aggressive or super risky. It's like just it's okay to take the money, dude. I mean, if you got a 192, right? If you got a 192.50 and we stay above that, I mean, here's what I would do. If we're up to like 205 or 210, I'd roll it another week. That'd be me. Like I'll give it a chance and I'll keep the 192.50. I'll roll it another week, grab, maybe another 50 cents or a dollar, whatever it would offer. But obviously don't roll it for a debit, and I want to see price getting further away from my strikes in order for me to roll it with confidence that we can stay above it. But if it is going to open at 195, fall to 185, I just want to get out of the trade. And hopefully you get out at, 192.50. Okay. Just got them Friday for 190. If I get executive. Okay. I mean, that's good, man. A 196 sell price, and you're sitting here talking at, 210, 212. Like you're right. I mean, you've taken a majority of this run, which is pretty good. So, all right, let me get some numbers here. We'll use the gap, which is still around 1 point. I mean, futures is still climbing a little bit. We're going to be sitting near the top. This is one thing with a gap like this is we're probably pushing towards like the second or third tier of a VWAP. Let me get my futures workspace up here for a moment. This would be Chris Pulver Trading. So futures is already at like the second band on the VWAP. I mean, we could push a little bit more, or I guess just kind of stay there for the day. But my biggest concern is that we start to eat into this profit and come back to the VWAP, tomorrow. So I mean, honestly, like maybe it's a big nothing burger today because Nvidia hit, market gaps up, and then very little price action takes place. That's fine. We'll take a daily profit play. But if we push higher, I'm still going to calculate out my highs and lows, calculate my defense levels. Maybe this market's like positive gamma, let's go, and it just does. So we need to be prepared for either a directional day. It is Thursday, so it could be a directional day. Futures has had a nice little run, and we'll see if there's more to it. Structure wise, I can zoom out, get these all-time highs in futures. Take a look at this from the short term. Okay, something like that. Something like that. Like if this is a correction, high, low, lower high, lower low, we're kind of making our way up here. I mean, do we form another lower high? This is a futures market, but that still gives us another chunk where the market from current price could still go up another maybe one to 1 point, maybe 1 to 1.2%. And that still doesn't give the bulls full control. That just gives the market, room to kind of channel itself and have like this orderly correction. So there's still some room for that perspective that, we have some upside still. There's no gap in futures, right? Like this is where current futures are at. We're already up. What we're going to experience this morning is a big fat gap to the upside because of yesterday's close to today's open. But seeing this at 1.58, we look at the SPY pre-market. Oops, clicked at the wrong spot. Let's go from here. So we're looking at like a 1.6% open on the SPY. which is going to be approximately my 1.6 on the SPX as well. So I'll take the close, go up 1.6. Okay, so we're starting around 67.47 today. Around 67.47. 67.47 ballpark. Take my VIX. We did like a 1.23. So I'm looking at like a 68.30 today. 68.30. Potential top, and that's VIX at around 19.6. Make sure that was right calculation. We did a 19.61 VIX, so it's a 1.22 around a 1.23. So that's my potential top on the day. If we're opening up here, and again, I'm going to be really conservative. I would hate to see this happen today. But if we gap up here, we should not have this this move, fall back to. I mean, really, we shouldn't even have the move fall back to the gap today. Based on VIX, based on ADR, if we gap up 1.5%, we should not fall all the way back to fill this gap. If we do that, then the VIX is going to be rallying. So anyway, I'm being conservative here. I'll take this level, go down 1.22, 1.23, and a low of the day is around 65.60. And that's the previous close plus VIX at 19.6. So down here. So that's a wide range, right? So what I'll be dealing with is we're going to be opening up around 47, around 67.47, somewhere in here. And this market maker move for the day, right now we're showing a pre move of like plus or minus 86. When we get to the open and the VIX is down, 4 or 5 points, this is going to be way, way, way less. So let's jump in. It's opening bell. Let's see what we get. Right now, 86. As this comes into the open, this is probably going to retreat to like maybe 50 something. I would assume this is a big drop to the downside. But ADR is around 78. Wow, 113, huh? That seems crazy. 92, 43. There you go. Like that's how quick it happens. Okay. So I should let my deltas sink in. 68.05. So price is opening. 68.05. 66.60. Let's go up like one strike here. Let me see if I can get $1. It's trading for 90 cents. Try to get this filled for $1. Okay, I'm in for $1. All right, trade's coming in Telegram in about 10 seconds. Today is the 20th. Okay, trade's in. So expected move. I'm now at an 8 delta on the call side and around a 13 delta on the put side. But with the current pricing skew, again, I'm going delta neutral. The put side should have a little bit more wiggle room. But we're going to see if this market wants a gap open and still have some juice to the upside. Let me get some real time. So we're way up here, man. We're way up here. If you can see my mouse, this is where price is at right now. That's where price is at. Okay. So a couple things we can do. Now, right now, based on the previous day's close, we're already above the 100% ATR. It should be very difficult to get to a 150 on the day. And my call side is above the 6,800, which from the close, I mean, we'd have to have like 150 plus percent ATR from yesterday's close to today. Not saying the market can't do that, but I'm going to put some defense trades in around that 68.30 handle. Okay. VIX has retreated again. So we're at 19.34 now. I'm going to put in my defense trade with a pin at 30 So I'm going to go 25, 30, 40 and see if this will fill for $1 and keep an eye on that for the day. And conservatively on the put side, this is way down here, but a 65.60. 65.60. So if I did a potential bottom, 65, 60, and 50 for $1 for $1. So defense trades are in. Don't really have to worry about those too much. They probably won't get filled. Let's see what price action gives us on the day. So trade is in. There's my daily profit play. Here we go. So in for $1, showing a small profit right now. And let's just see what price does. Let me open up some real-time gamma, see if there's anything sticky today. But again, gaps can be very disruptive because it's such a big move, right? So I want to see from current price, we're at 47, and plus minus on the day has retreated from 80 something to now about 40, right? So I mean, we saw like 85, 86 pre-market. Now it's down to like 42. A lot of that's just the adjustment in the VIX. Okay. So I mean, my sell prices, I mean, I'm at 60, 68.05. Let me go back to this workspace here. 68.05. Okay. And then on the put side, 65, or I'm sorry, 66.65. 66.65. Which hopefully nobody's encouraging a gap fill today. Because if we gap fill, then that puts everything at risk, right? So you can see that I'm right in the middle, roughly speaking in the middle, which is a good spot to be at. There's a little bit more skew in the market where I can go delta neutral and keep my put side a little bit further away. But we will see if this market has the ability to gap higher and still rip, or if it's going to be, green and just kind of stays here for the day. Maybe it drifts, but hopefully doesn't go as high up. ADR is around 78. So let's go from here at the open, low of the day. I don't love that. My call side is not quite. Maybe the ADR changed. Nope, it's freaking 80. All right. We'll see. I mean, I'm in the trade, so I'm gonna potentially consider maybe some defense trades up here, but I've already got them in pending. Let's keep an eye on things. So here's real time gamma again. Ridiculous move to the upside. Already at the 50, already at the 100, and there's little to no gamma to the downside. I mean, we just kind of got to ride this out. Okay, so we're back in a positive gamma. This is a feedback mechanism where positive gamma typically is everyone's selling calls, everyone's selling puts, provides kind of a buffer in like a slow grind market. Is it difficult to get to 6,800 today? I think it is. I hope that it is, because that's our call side. Okay. Greg, they are, dude. I mean, this stuff is real time. I posted this in Telegram at 9:31. So your Telegram daily profit alerts, I type it in when I say I'm gonna type this in 15 seconds. It's posted. So do you have notifications on Telegram? It should update. This is real. I mean, this is just like sending a text message to you. Yeah, that's weird. I mean, Telegram usually is not laggy. So let me do, how about this? Telegram test. How long does it take to get that message? Instant. Yeah, most of the time it is. Okay. So that's why we use Telegram. So, if you're trading on a computer or laptop, it also might be helpful to have your Telegram up on your computer if it's lagging on your phone or however you pull in the Telegram messages. So All right. So I have the daily profit play in. I have the defense trades in. I could like a couple ways I can tackle this today is I can recenter my daily profit play indicator if you want to look at some fresh VIX boxes, but I'm gonna show you here from the 6642.15. I'm gonna write this one down. So 6642.15. If I put it at the open today, which is going to be around 67.49, 67.49, I just want you to see where the box goes. Okay. So the box high now is around 32, and I have my potential top here at 30. My box goes down to about 66. We actually have our put side on daily profit play there. I have my defense trade even further just because I'm being conservative on those defense trades. 5, 10, 65, and what's wrong with those? Oh, Klein, did you not enter it correctly? Okay. So defense trades. So what I'm doing, so the VIX is at 19.4, and that's what we calculated in 19.6, right? We did a 19.61. So as long as the VIX isn't ripping, I'll put this. I'm going to go VIX at like 19.7 to just alert me that if the VIX is going higher, which it's kind of crazy, like if the VIX is going higher, 19.7 are coming back into the 20s, then I'm going to adjust both my up and down defense trades. Okay, so I'm going to adjust this to 20. And I'm going to put alerts at 19.6 and 20 because I will recalculate my VIX and probably move those defense trades. Okay, give me a second. All right, so potential top at, and I think I did the pin price at 30. I did the pin price at 30. This shows around 31. I mean, 32 still gets me a profit trap. I just don't want to see price going above 35. So it's very tough to get to this level. But if the VIX is retreating, it shouldn't be able to get there. Or I should say, if it gets there, it should be able to exceed it within, the calculation that we did. So I'm gonna keep it there for right now. I've got a couple chart alarms set on the VIX. I'll post those defense trades. They're broke wing butterflies. I'll post those Telegram for members. Defense trades, if needed. So the 67, or I'm sorry, 68.25. 68.30. And then the skip strike to 40. Went all the way down to 60. So it did 65, 60, and 50. 65, 65. 65, 60. Skip strike to 50. Okay. So defense trades on Telegram. All right. So Scott, it's members Telegram. If you're in Daily Profit Play members area, then you'll have the specific channel for Daily Profit Play. Yep, they're posted. Vladdy says get in for $1.40 credit. How wide you go? Yeah, $1.40 credit in our Daily Profit Play trade. I'm guessing you went 10 wide versus 5. John, we need to drop a message when we need. I mean, you don't. As I said yesterday, it's like I'm putting them out there as pending orders. They don't cost me anything, so I'm putting them in there as it's a defense trade with my ability to kind of calculate the highs and lows. So I'm fine with them being in my broker platform. If they don't get filled, it's no big deal. In fact, it makes my day easier to have them not get filled. Okay, daily profit play for buck 10. Good fill. So the defense trades are not filled. They're pending orders. They're trading for literally like 5 or 10 cents, and I'm asking the broker to give me $1. So they're not even close to getting filled. So what we're going to monitor this morning is going to be this. If this is up, 30, 40, 50 bucks out of the dollar, I'm going to take the profit. And we'll see where price goes. So it's encouraging that the market is up. I think it's more important that the market is up and stays. Whether or not this price action materializes into, follow through today, or it is already excited, it's kind of just going to do this for the day. And we've seen that happen with big gaps up or big gaps down. It's like the market doesn't really do anything intraday. But could that be a bull flag for, tomorrow? Maybe. I don't know. You know, it's like this is stuff that you just we have a plan. So right now, 6,800, 6,805. My 5 is my call side. So we still have about 50 points. And the plus minus on the day is 38 points. So even if we go up from here, it shouldn't threaten our 6805. It shouldn't. Based on this market maker move plus current price, we shouldn't threaten that 6805. Okay. So I'm going to keep an eye on this for the day. Nice, Randy. 10 wide filled at $1.80. Awesome. Good stuff. All right. So quick update, DPP update, putting this in member Telegram. Looking for today's trade to show 70-cent debit or lower to protect profits. And if it looks like it's one of those mornings where we're in session until, about 11 o'clock or so, and prices are still like very calm and very neutral, then it might be worth hanging on to it a little bit longer. If we are sitting here talking for the next, hour and 15 minutes and price is down aggressively or up aggressively, well, we'll have a, game plan and a backup plan if needed. So my put side is around 65 and my call side is around 6805. So based on current price, I don't really want to see a lot of excitement. I'd like to see this market just be up and just kind of chop around for the day. See if this will go back to, neutral. So it's a big call option sentiment right now. But if it retreats to like maybe 30 and 30 or 35 and 35, something like that, I just want to see if this gets back more to neutral and we just get some choppy price action. Richard, I'm not sure if that comments for me at all. SGBX, I don't even know what that is. It's not my Telegram. Defense low. Yeah, it's way down here. 65.60. So buying at 65, 65.65, selling at 65.60 to pin this, which is way out of the way. And then a skip strike down to 65.50. That's correct. So again, we talked about this in masterclass. I'm taking remember, this is the center price. Okay. Center price is here. I'm taking the gap and the VIX. And that's my defense high. To be conservative, I'm taking the close from yesterday and the VIX. That's my defense low. So this is unlikely going to get tested. This possibly gets tested because the momentum is clearly to the upside. If this market wants to run, we take the VIX box extreme. It's hard to do that though. It's hard for the markets to push, to the VIX extremes. But when it does, it's also given me a lot of confidence that our ability to kind of, get filled at the top and take some good trades and defend our trades, especially if the daily profit gets in trouble, it does make life a little bit easier. Okay. And look, if you're worried about prices testing above this level, then because I have a 6805 and a 6810, we can defend right above that if we want to. We can defend right above it. So if I wanted to defend like a 15 or 20, Watch. I can go 15, 15. I'd have to go a little bit wider, so I can go 15 to 35, which would be my call side, 15 down to 95. But I'm not going to risk 200 bucks. Like that to me is silly. So let's go up to 20. Um, Fudge. 20. Kind of defense could I play? What do I have to buy? I could buy 15 wide, so maybe this 20 and then down to 05. Like now it's going to be a wash trade, right? If I get in this trade for $14 or 14.10, we've done this before. It's like if I get in for $14, I can make $100 on my daily profit play. I'm risking at most $100 on my iron fly defense. But if price never gets there, I'm just wasting this money and I'm washing my daily profit play. So I'm not going to take that trade. That's why I put in this is why I've talked about it in the masterclass. I'll repeat this again today at 1:30 with our masterclass. This is why my defense trades, I prefer to do a broken wing butterfly because you just sit. Okay. Scott, you're not in my member Telegram, dude. You're probably talking this, right? You're talking this general Telegram, which is for everybody, not my daily profit play for members. So are you a member of Daily Profit Play? Because if you are inside your classroom, there is a specific member Telegram for you for the alerts. Yeah. So jump in the classroom, go into one-click trading, log into your classroom for Daily Profit Play. There's a Telegram link to join that member channel.
What's up, Chris?
Nothing, dude. I've got a couple. Yeah, sorry. I had a message coming in from developers again. I've talked about this before. I've mentioned something I'm building out called an income grid. Let me see if I can give you a little sneak peek here. It's very rough right now, but I'm really excited for this. Let me see if I can find it. I'll get a screenshot of this. All right, I'll try to make some sense of this in just a one screenshot explanation. So what I'm building, and again, this is very rough, but I'm building out a dashboard that will be like a grid trader for SPY, QQQ, and SPX. I have a macro dashboard which gives us our directional bias. So up here at the very top, you can see it says indecision. This screenshot was taken yesterday when we were less than the 50 EMA. Okay, so it is not wise to be bullish if the market is less than the 50 EMA because it's a huge indecision technical, right? So in between the 50 and the 200, in between the 50 and the 144, I don't want to be directionally biased. Like I get that the market can still find a 100 period moving average and a 144 and a 200 moving average. I get it. But as far as wanting to trade, when it crosses over the 50, if it crosses the 50, next stop 100. If we bounce there, then we get back up, then we can resume our buy zone. So anyway, point is, I took the screenshot yesterday, indecision, but what it's doing is giving us these levels based on at the monies and pullbacks, where I'm essentially giving myself up to like 3 to 4 grid trades for a weekly expiration. And this isn't a Monday to Friday. I like to go Monday to Monday. So I'll give myself the full week of trading plus the weekend just to let the market stabilize if it's down. And that also gives like Thursdays and Fridays a chance to rally and then come into the next week with a little bit more upside. So I do a Monday to Monday for the weeklies. Okay, so I'll type in weekly here. And then I go from monthly expiration. Okay, monthly expiration. I go from the monthly So monthly to monthly plus 4. I know you can't really see that very well, but we have this is a monthly expiration for Friday the 21st. If you look at the expirations here, a lot of your broker platforms will kind of showcase the big expiration. So there's the 21st. This is a big monthly expiration. This is considered an OPEX. So this expiration on the 21st, okay, and then we go from the 21st all the way to December 19th. So what I'm going to do is take those monthlies to monthlies plus a week, give the market a chance to find our grid levels, get us filled, grab some profit. Right. So anyway, what the screenshot is this will tell us I have set parameters on what trades I'm willing to accept. Okay. The one thing that I think bothers me and it doesn't bother me because I'm totally comfortable with the trade-off of my reward to risk is not great on something like daily profit play. Every single day, if I want to sell premium, it's not great. I'm taking on more risk than I get in reward. So what I'm doing with this income grid is I will not accept a trade that is putting me at a major disadvantage of reward to risk. So for example, what I'm willing to accept is if I'm going to do a debit spread, okay, if I'm willing to do a debit spread, and I'll write this out here. So if I do a debit spread, let me type this up in, let's say yellow. So a debit spread, how many of you trade debit spreads in SPY QQQ? Okay, debit spread SPY QQQ. Type in a where yes if you traded like bull call spreads. Nate calls them wrap orders, but it's a debit spread, right? You buy a call and then you sell a call at a higher strike. You need to cover that cost of the trade, and then if price is above your sell strike, you make money, right? Yeah. Okay. So most of it's maybe familiar with it. Okay. And then also what we can do, and you can do this in SPX as well. Okay. But also you can trade credit spreads. And I'm going to focus credit spreads primarily on SPX or XSP. Reason why is because those are cash settled. And even for a weekly expiration, I obviously don't want to take on any assignment risk. I don't want this service to have any risk of assignment. So we're going to stick with debit spreads on SPYs and Qs. And then we can do whatever we want on SPX or XSP because there's cash settlement there. We just have to have price, above our strike prices. All right. So what I'm looking at is what I'm putting the rules is on a debit spread. So these are the dashboard will light up green at my ideal fills. So for example, I'm not sure why this is like center aligned. I'm just going to left aligned here. Give me a second. There we go. Make it a little bit easier to type. So light up green on my ID fills. If I'm doing a debit spread, let's say that we have a $1 wide. I want to do a 50-cent debit and a max 60-cent debit. I do not want to pay more than 60 cents for debit. Okay. So ideally, I have a 50-cent debit for a dollar profit, which means I risk 50 to make 50. Does that make sense? So that's a 1-to-1. And that's what my dashboard is going to be monitoring in real time. I'm willing to accept 60 cents because there is a built-in positive drift in the indexes. And so even with a bull call spread, it's going to, we'd have to go like slightly in the money to get filled at 50 cents. We can go pretty much at the money and take like a 60-cent trade. So if they come to my grid levels, and at the money is probably going to trade for like 60 cents, which is acceptable. But ideally, I'd like the 50 cents. So my risk is 1-to-1. This makes sense? Okay. If we had and it's rare to see this, but maybe on the QQQ, a 250 wide. Okay. I'm looking for $1.25 debit. And I'd have a max here of about $1.50 because I'm willing to take it if it was 60% times 250. So max would be $1.50. That makes sense? And because we're trading, if this is weekly income, we're going week to week, we are rarely going to see the spreads wider than 1 to 250. Right? Maybe the NASDAQ, if it's a weird expiration, we might have a $5 wide. And you can decide whether or not you like that or you want to take the trade or not. You can also, if you're going to go 5 wide, I'd rather trade SPX. So it'd be a 250 debit, or maximum would be just over $3. So take your 5 wide times 0.6, so $3. So max $3. Okay, does that make sense? And then down to the credit spread side, same thing. SPX obviously is only a 5 wide instrument. So this is going to be credit spreads. So I'm looking at a, $5 wide. This would be SPX, not XSP. You can get dollar wides and you can trade that however you want. But if we're doing credit spreads, so like XSP $1 wide, I want a 50-cent credit, and I'm willing to accept a 40-cent credit. Okay. For SPX, we're going to have $5 wide. So I want 250 credit. I'm willing to take $2 credit, but not less. So what my dashboard is doing is it's going to help us find the macro environment. Are we bullish? If so, what do we do every single week? Let's focus on buying grids, right? And so I want to get filled at my ideal price where I'm willing to take on way less risk to have a trade that has a high probability and is in a positive drift environment, plus the macro dashboard pointing to a bullish trade environment. And we can do this for bullish trades. So whether you like a debit spread to avoid assignment risk on SPYs and Qs and you get your dollar wide strikes, we can also do this for credit spreads. I'm primarily going to do SPX. You can do XSP as well, but it kind of works the same way. Make sense? So that would be if we are bullish, right? If we are bullish, if this thing is showing, this would be green. So I'll highlight this. So this would be bullish. Okay. If this is bullish, what it's monitoring is it's managing all of my grid levels, and it's going to light them up and say when it is at my ideal fill price. So we can reference this thing every single day, and it's good for a week. If I take the trades on Mondays, I'm looking to go out for the following Monday for expiration for weekly income. If I'm going out for monthlies, I start at one monthly expiration and I go to the next. Okay. I give the market probably 34 days to either one, fill me at a good price, get a price that I'm comfortable with, and then find its footing, get back into positive territory. With credit spreads, remember that you're lowering the cost basis with a credit spread. With a debit spread, you're increasing the cost basis just by a little bit. So your cost basis increases by the cost of the debit. Your credit spread will decrease by the credit that you pulled in. So if you want a lower break even, credit spreads are a better way to get a lower break even. Okay. But the nice part is we can really define the risks with the debit spreads where, if I'm paying 50 cents, I need price to literally move 50 cents. And usually week to week, the S&P is good for, the SPY is going to move probably somewhere between $4, $5, $6 a week. On a good week, it could be $10 to $15, $20. So we just needed to cover the cost of our trade. Okay. And that's exactly right, Mike. And that's what we're doing. So the dashboard will be lighting up level by level, but you can also just put the trades in and pen them. So we'll have the grid levels. So what we're going to do is have it where it monitors in real time, like the closest level that it's at. So if it's close to a level, it'll flash that up. That's kind of the dashboard of what it's going to show initially. And also there will be an expand all, and it'll give you all of the other levels that we're watching. And you can just follow along with those price actions. You can set these orders up ahead of time. In fact, that's what I will be doing is putting in the orders, for a Monday. I enter all the trades on a Monday and I just let them work. Okay. So if I'm dead wrong, the most I can lose is, the stacked income trades would be a grid of maybe 2 to 3 trades. So even if I'm dead wrong and I trade defined risk, there's no way we're going to do anything to damage our accounts. We can take on maybe 2 or 3 losses in a row, and that would have to be an outlier type move of a week. It can happen, obviously, but it's very defined risk. So anyway, good stuff. Okay, so I'm excited about this. Like I said, you'll see this eventually. This has been, kind of now a couple months in the making. We're getting it now where I've got some guts to play with. I'm getting some more, and I'm going back to putting my indicators together, using some on demand. I'm trying to get the back testing with these fills the way I want to. That's the hardest part, is trying to get the fills, lined up exactly, because it's hard to back test that in my options Omega. They don't let me take the levels that I want and set the exact same price that I want. So, if I was going to set a pending credit spread on my back testing software, it just assumes that I'm going to take the trade at, oh, congratulations, you get a 50-cent credit on a $5 wide spread. Well, that's not the trade I want to take. So I've got to go in a little bit more manually to test this stuff out for the last 3, 4, 5 years. But I know the house buys that we're working with. Most of the time the market's up, and these levels, if they get filled, we have at the money, essentially at the money, we have a 55% win rate. When we get the discounts, we have a 70% win rate. The deeper we go, the more reflexive the market is, and we tend to have a 75 to 85% win rate. So if you get the dips, they tend to work out very, very well. And again, we load them up. It's not like we're going broke on a nasty week. It's like you can choose what levels and how kind of aggressive you want to be. But the nice part is our fills are going to be, I think, more of a like a risk reward that you should be more comfortable with, as opposed to, I'm risking 4 to make 1, which is what I do every day in daily profit play. So it's not daily profit play, and I get it. Like it's probably the one thing that, and maybe I take it upon myself to teach traders this, but I just don't think anybody listens. Anytime I talk about risk, nobody listens, and maybe you do, but most people don't. And the reason why is because they don't care, because they're not losing, right? Nobody's losing. We're winning in daily profit play. We're winning in waterfall. We're winning in this. We're winning this, and then all of a sudden we take a loss. To me, it's part of the game. To me, I know that trading is going to involve losses. And so I have said from the very beginning, this is my risk. I'm comfortable with that risk. If I lose, this is the most I can lose. And I'm comfortable with that. But unfortunately, what happens is when we take a loss, I discover that traders were, 10 contracts to my 1. And their losses sting a little bit worse. And emotionally, they're in a way different place than I am. I'm annoyed that I lose, but I'm not, blowing up my account. So it's the Mike Tyson saying, which is everyone has a plan until you get punched in the mouth. So don't let the punch hurt that badly. If we're going to lose, let's take defined risk trades that don't cost an arm and a leg. What's your total risk? If I lost for my income grid, for example, if I lost on every trade that I stacked in, what's the worst that could happen? And if that doesn't hurt you emotionally, then you're totally fine and you will survive and you'll always trade and you'll be profitable. But you can't question a strategy by taking one loss, So anyway, I'm just trying to set some expectations. But like I said, I've done this for years and I know that people don't listen. So, and I'm saying maybe I've got 200 traders that listen, but I know what happens. People like the fact that I take the trade live. They double, triple, quadruple, 10x the risk, and they win with me and they make a ton of money, and then they lose and like, my God, I can't afford to lose like that. So you change your plan and then you start trading smaller. It's like, just don't make the big mistake in the first place and don't ever lose. And literally, I just got off a live session before I came into Daily Profit Light today. If you know Tom Sosnoff, who built Thinkorswim, who built Tasty Trade, he just left the network. Now he's on his One Lucky Dog and Lost Dog network. Tom Sosnoff is like a serial entrepreneur. He's a junkie trader, but the guy has said some of the most, important things in trading, which is most of the traders they see in Tasty Trade, which are, hundreds of thousands, if not millions of users, most people, when they have trouble in their accounts, it is a trade size or position size issue. So when people are in trouble, it is a trade size, position size issue. So guess what? Take control of your trade size, position size. It becomes less of an issue. And I learned that from Forex. Forex trading, it's like I traded with virtually zero leverage. It did just fine. I was still generating like my best year in Forex was over 100%. And I was trading like standard lots, one standard lot on like a 50K account. Cool. It's not like unbelievable. I still use stop losses. And then once I started to remove my stop losses, I traded way smaller. I was trading literally 50 cents a pip, $1 a pip, and I'd build my positions up to a 1 or 2, 3 standard lot position. I'd give myself plenty of time and wiggle room and flexibility. And that, for a 24-hour market like Forex, I slept like a baby. Sometimes I had some stress and sleepless nights. But for the most part, I did okay. So anyway. All right, Rick says, I always listen to your risk assessment, keeps me sane. I'm glad. I'm glad a couple people listen. But I know for the most part, it's probably a Pareto's principle thing where, maybe 20% of my listeners will listen. I know myself that was, look, I learned from a professional trader that said, never lose more than 20 pips a day. I listened, but I didn't really change my plan to go into that type of strategy until I lost, 50 pips in a day because I was trying to get greedy. I thought there's no way I'm going to get stopped out. So I widened my stop, and I still get tagged and I lost more money than I wanted, or the first time I had a margin call when I over leveraged my account. I had a $20,000 account and I took 7 standard lots and the broker closed all my positions. I took a $3,000 loss. I didn't do anything wrong, except I took too many trades and I over leveraged my account and it liquidated my positions. So yeah, I've had some lessons along the way. So I get it. Like you will listen to yourself when it's like, holy crap, that's a huge mistake. And that's preventable. That's avoidable. But I'm here to share, like, it doesn't have to be that way. I don't want you to have a margin call. I don't want you to have to blow up your account. I don't want you to have to lose a ridiculous amount of money in order to then listen to yourself of where your comfort level is in risk. If trading is boring, you're going to be fine. When trading is emotionally swings and highs and lows, it's going to be always like that. So I think taking control of your trade size and your risk is going to make life a lot easier. Okay. All right. So I hope that helps. So anyway, I'm pretty excited. The income grid, like I said, very rough right now. But like week by week, we're getting some additional like beta versions, and I'll share this as it comes along. You'll see this probably officially either end of this month or into January of next year. And this is going to be, I mean, I've been working on this for a long time because it is like, to me, my next kind of tech piece, but also paired with a pretty good grid system. Okay. So more to come, but stay tuned for that. All right. Price action of the day. We're right back to center. Let's see how we're doing on daily profit play. We should be showing some profit this morning. Currently up about 35%. Great. 30%. I'm going to let this marinate a little bit longer. Good thing is on our levels, we are smack dab in the middle. Here's our center. We had a little bit of skew on the put side. Hopefully not too much more damage to, either direction. A couple things to take away. Plus minus has reduced all the way down to like 45 or 40 on the day. Now from current price at 67.47. Let's see if the market makers are correct. We have November 20th for today, plus or minus 36. Well, if we go 36 points puts us down to about 6,700 from right now. Okay, we go from here 36 points to the upside. That's around 67.80. If the brokers do their job or market makers do their job, we should be totally safe for a daily profit play today. If the VIX is going to increase, which right now is at 19.91, so I did have an alarm go off that we calculated our initial VIX at 19.6. Okay, so I still think that this is a decent defense trade. I think because we're way the heck down here. Okay. So I'm going to monitor this one. It is unlikely that this defense trade gets filled at the lows today. That would be a required move of maybe a 2 to 3% drop. Yeah, we'd have to drop 3+% today. I don't think that's going to happen. So I'm going to leave this one here, but VIX is up to 19.9. I'm just going to let them marinate for right now. We are getting a pullback here. VIX is up. Markets are falling down. That's a typical correlation. So the good thing is we're nice and centered. I think it's going to be challenging to get up to 68.30. Okay. But if we get like a surge to the upside, I might adjust this to a higher VIX. So I will just get a rough calculation right now, 19.92 to so I did a 1.23. Now it's a 1.24. Not a big change. And because I'm also using the gapping plus the VIX, it's maybe one strike different. So let me go exactly to the open here. So go exactly to the open, go up 1.24. So we're at we're still at 68.31, 68.32. So, really, I don't have to change anything yet. If the VIX is ripping up above 20, I'll put this thing up to like 21. That's a noticeable VIX. If all of a sudden we're, down to 19.3 and we're back up to 21, might just want to take into consideration where we're going. Okay. Nice. David filled at 75. So you're out, right? You filled at whatever your credit was and now you're out of buck or 75. Good, man. Very good. Okay. Black Friday. Yeah, I'll post that as well. If they're doing Black Friday, I usually do that myself. I think they save up like 50 or 60% in TradingView. I literally add my Black Friday stuff on my TradingView. I've got an affiliate for TradingView. Get the Black Friday stuff. It's a great time to do it because I'll just add to my subscription and do it for a fraction of the cost. I've never paid more than, like 150 to $200 a year for TradingView. I know that I think their a la carte price is like 500 to $1,000 a year, and they just shave off a ton of that. So yeah, I don't mind just adding to my membership. That's for sure. Okay, good stuff. All right, Blake, let me see where we're at here. We're good.
Yeah, we're good, brother.
Okay. All right, everybody. So here's the dealio. We'll sit and just hang out a little bit. I'm going to let Blake play an encore session from this week for Daily Profit Play. I will be in the chat live. I'm still going to monitor our positions from this morning. Daily Profit Play Masterclass today. This is going to be an encore masterclass. We did one on Tuesday. It was one of my favorite classes that I've taught thus far, and I'm going to repeat that again today. I already have notes available in the classroom. I have Tuesday's session available in the classroom. I just want to see some new members. Let's teach it live. Let's bring, if you want some clarification from this week as well, come back into the class. If you're a new member from this week, come into the class. It will be recorded if you can't attend live, but we're going to go through not only daily profit play, but our daily profit play routine, which I think is now as refined as we have had it. Okay. And there's a difference between refinement and over optimized. Okay. We're still taking the core strategy. We're still doing very well. Our win streak has bumped up. Let me check it here. Our win streak is, I want to say we are now 34 for 37. Okay. 91.8% winners in the last 37 trades. Not too bad. So we're doing something right. And on top of that, having the defense trades, it's really about risk management, which I know I spent a little segment on today. So I think it's just helping us refine, what we do on a daily basis. And also, one thing I'm liking a lot about daily profit play is, man, you don't have to worry about anything other than today. You trade today, you win the day, and the rest, you do it again tomorrow. So the Fed, non-farm payroll, NVIDIA, this market, it's it doesn't matter. Even this decline, we have won through this entire slide in the market. We have won throughout this entire year for some of the craziest stuff I've seen in a long time. I have not been in the markets where I've seen, basically macro analyst outlooks as this market could drop 20%. This market could rip another 20%. This market could drop 40%. This market could rip another 20, 30, 40%. It's a crazy tail risk on either side. And we'll find out what happens. But the nice part is that tail risk doesn't happen all at once, right? If we lose, we have something pretty wild and crazy and outlierish that has to happen. We don't really lose very often. You know why? Because there are hundreds of billions of dollars on the line. If the markets do something dumb and outlierish and inefficient for a day, they tend to get it right back in shape the next day. So any loss that we would incur, we can literally look at the chart and say, yeah, that was a crazy move. And not often do you have a strategy that can give you the excuse to say, yeah, the market did something really silly, because most of the time the market doesn't. So that's a bit of our edge. In addition to, market makers do a great job. They've been doing this stuff for over 50 years. That is what we align ourselves with in the presentation. So let's see here. Would it be possible with Waterfall to post an exit date? Expiration is the exit date, Randy. I mean, if I'm taking it to expiration, that is the exit date. If we're going to, well, I know if you talk about the trades we've exited. I mean, I'm not going to go back on my broker platform for 100 trades and find the exit date. They were issued, waterfall income. You go back through alerts. If you want to see the exit date, literally go into your classroom. All the alerts listed for waterfall income would give you the exit price, the exit date. So I can go to the classroom and try to do that. It's just a little maintenance on my end. But the trades we're in right now, sure, I can post it when we officially exit those. Well, otherwise, I'll just go into the classroom and go into the alerts. Yeah, I got it. Okay. What else here? Beverly says, yesterday you mentioned probability of profit goes up to 95% of trade Mondays and Wednesdays. That's correct. Yep. And again, that's a 3-year sample size. So the one thing I also continue to do with daily profit play is every 6 months. So by the end of this year, we're gonna have another kind of nerd out session. We'll run tests again, and we can go from June of 2022 to now the end of 2025. So that would be, 3.5 years of zero DT data that I can use and show is still, Monday, Tuesday, Wednesday, Thursday, Friday, do we have a best day of the week? And, routinely we saw that Mondays and Wednesdays over all these different variety of testing that I've done within the context of daily profit play, Mondays and Wednesdays have increased the win percentage to 94, 95%. So it's still my favorite. I don't know what it is about Mondays and Wednesdays. I don't ask questions. I just know that those have proven to be the clearest, winner days. Clearest, by far. Now the rest of it still wins 90 to 91%. So you still have win rates. But it's nice to know, if you want sheer win percentages, especially in a service like this, where yes, I realize that day to day we are taking on a bit more risk than reward, but if I'm willing to take on that risk that's a little bit higher, that's also why I'm incorporating the defense trades. Because if I'm going to lose, I'll just keep it simple with one contract. If I lose $400 to make $50 to $100, I get that that's backwards. But if I lose 400 and I can repair that with a $200 to $400 winner or a $200 to $600 winner, I either one, cut my losses down to make it very manageable, or I even walk away a winner on the week or the day. So that's what's important to kind of follow along with is we do have a defense trade, which helps us mitigate a lot of the risk. So when we do lose it, it lessens the blow. And then when we actually win the day, then we never really experience the downside. So again, it's just a part of the game. And there's very little you can do in a 0-day environment to defend yourself. Like you can't roll in a 0-day. In fact, all you're going to do in a rolling situation is roll for a loss and dig a deeper hole. And I think in a 0-day environment, when the markets could gap up or gap down, it throws off the options chain so dramatically. I feel like it would be impossible to roll with consistency. So when you trade 0 DT, it is essentially what can I do to win the day? And if I don't win the day, don't trade too big, don't over leverage, don't double, triple, quadruple down. Just accept that it wasn't your day, and the market makers will do their job and fix what they need to fix, because they can't afford to let multiple days go crazy. They can afford to let one day go crazy, and it does happen. But now we are equipped with the know-how and the calculations to avoid a lot of those like big extreme losses. Okay.
Beautiful.
All right. Thanks, Blake. All right, let's play this. And today's masterclass is 1:30. I'll be in the chat. I'll stick around, and I'm just going to keep monitoring price. All right. Thanks.
All right. Here we go. I'm going to kick this off.
Obviously, we're staring at a VIX at 25 right now. Things seem a little wobbly. There's always risk when trading. Past performance, not indicative of future results, but we're talking about an 89+% win rate over the last year plus. Average return on risk about 15% with a same day hold time. We're in and out of these trades same day. Okay. There will be losing trades. I'm winning. I'll go to my tracker here, my exact tracker. We are at a 89.5% win rate over 521 trades taken. We have 467 of those trades as winners. Okay. The model portfolio